What's good, y'all? This is Joel. Now coming back at y'all with another video. So with this video, we're gonna do the NAS100 recap for July 21. And here you see July 21st. We do not have any news, so this would be a legit trading day. We'll be behind the charts looking to see if the market gives us a setup. Now, let's also do a sort of foresight into the next week, right? So we take a quick jump in. Monday the 24th, you see flash manufacturing, which is fine. Tuesday 25th, you're seeing CB consumer confidence, which is also fine. But then on Wednesday, you're seeing FOMC, which usually whenever there's FOMC, this is usually a major news driver. So a lot of times you can expect price to generally consolidate until the 2 o'clock, 2:30 hour, which price will expand. And usually it takes out traders on both sides. It'll wick both ways, or you'll just see it'll just rapidly move in both directions to take out traders. So whenever there's FOMC, the day of FOMC, and every single day following FOMC for the rest of the week, I do not trade. I do not engage in price. So for this week alone, I would only be trading on Monday and Tuesday. That's it. I won't be behind the charts Wednesday, Thursday, Friday. Basically, my trading view will be collecting dust after Tuesday until the next week, right? Until like Monday the 31st. So that's pretty much the breakdown for next week, but I'll also do daily videos for that too. So jumping right in. Once again, we're on the 15-minute time frame. This is the 8:15 to 8:30 candle. So at this point, we'll mark our liquidity pools, both buy side and sell side. So at this level, we look left to mark the most obvious swing highs and swing low. At this point, the most obvious swing high is this level right here, because this is, yep, the most obvious swing high from the highest point that we have here. And now the most obvious swing low, um, most obvious swing low is technically right here. So even though these two candles look like um, equal lows, if you follow my cursor to the top left of the screen where you see this L, that means that it's the low price. So if we look at the numbers, right, this candle right here, the bullish candle, the last few digits is 505.6, and then the candle to the left is 505.8. Technically, this bullish candle right here is lower than the candle to the left, making this our sell side liquidity, like it makes essentially a swing low. So, a lot of times I like to be super precise about everything, right? And like follow the technicals, which technically this is a swing low, which you can see here as well when we drop into the um lower time, right? You're seeing it. So now at this point we got our liquidity pools marked, and now we wait for 8:30 open to see what happens if any liquidity pools get taken. So now we'll just begin fast forwarding it, right? We'll see if anything gets taken. Oh, perfect. So this wick right here, this is the 908 candle. So at this point, we see that our buy side liquidity was purged, which is great. Right, so at this point, right, we will still need to wait for 9:30, but after 9:30, we want to see this high get taken. If this is the highest high prior to 9:30, we want to see 9:30 open, clear the high, and then deliver us a breakage structure and take price lower. So that's what we're looking for. Keep fast forwarding it until 9:30. There's 9:28, 9:29 to 9:30, right? So this next candle is the 9:30 open. So boom, you're seeing at 9:30 a very aggressive bearish candle. However, we're not really interested as far as what price does, right? If this liquidity pool gets taken, then we don't have a trading day. But if this liquidity pool stays intact, right? In a perfect world, we want to see price come back up and clear this high. So I'll just mark it for you guys. You guys can see it clearly. We're waiting for another push above, right? Because buy side was taken, we have a sell bias. We are only interested in taking sells. We're not interested in any buys, right? We're only interested in taking price down, but we want price to make the new high for the session. So now we will just watch price. Okay, boom. So it might be a little hard to see, but this high does in fact get cleared, right? And I'll put my crosshair right above it, right? You're seeing that this high, I use a trend line to make it a little bit easier, right? You're seeing that this high does in fact get taken right here. So it does meet our confirmation, I guess you can call it, of it making a new high, right? We waited for this price to get attacked. So once it got taken, my next um, step was to mark the last structure point, which is this low down here, right? This is the last low before the liquidity grab. And now we wait to see what happens with price, right? We at this point we would like to see either another push above then a breaker structure, or we want to see a breaker structure right away, so we could take a sell down to the sell side liquidity. So see another candle. It makes sort of like these mini equal highs, but this is super minor, so nothing to be concerned about, right? We see another bearish candle, another massive bearish candle, another aggressive bearish candle, which right now, right, we're seeing an obvious fair value gap. So as these, events are forming, I like to mark them as I go just to save myself time, and just so I can have everything like organized and already set if the trade sets up. So right now we're still bearish because this low is still intact, but if price continues down and breaks this level, then we are officially bearish, and then we have an obvious fair value gap. So boom, at this level here, you can clearly see that this low gets cleared with this candle right here. This candle makes a new low, so we are officially bearish and we broke structure. So remember, just as a reminder for you guys, from the displacement low, which is the light bulb, to the highest high, I'll shade it in pink, we want to find a fair value gap within this range. So obviously we're seeing one gap, the one that I highlighted here, and we're seeing another gap at this level. So two obvious gaps, right? If I go in the 2-minute time frame, um, pretty much the same thing. And 3-minute, right? Not really much happening on the 3-minute. So in a case like this, what I do, I like to take the most extreme gap. So in this case, this gap all the way up here, the highest gap, because we want to, I like to catch price on a retracement so we can get a better entry, better stop loss, better take profit, risk to reward, everything. So at this point, once I see the structure break right here, I immediately, um, started marking up. I like putting these rays for, so I can get the exact values of the entry and the stop loss, right? Because I like to trade very precise. Um, and so an entry would be here, stop loss above this high, right? Safe place to put, relatively safe place to put a stop loss because these highs were already activated and cleared. So we don't really expect price to go back up there. Now you're seeing, um, at this point that the risk reward is 1 to 1 to 1.59, which is not ideal just because I usually prefer to have a risk reward of at least 2 to 1. Um, Obviously, the more the better, but at least a 2 to 1 for me to want to engage your price. So this was sort of an interesting situation of a trade. Uh, in a situation like this, if you wanted to increase the risk reward, right, you can take it from halfway through the gap, which if you ever wanted to measure it, right, you can take a fib and you'll see that 50% is right at this level right here. So this would be 50% of the fair value gap, which this would be a 1 to 216, which is fine. For at least for me, when I was trading on this day, uh, price was, I was sort of like trying to figure out how to enter while this was all taking place, and I remember price was essentially like retracing back up, and for me, I essentially got in a market execute at the very top of the fair value gap for about a 1 to 3. And the reason for this is because when price comes up and returns to the fair value gap, you know, there's no guarantee that it's going to fully close the fair value gap, right? A lot of times it can just come in, tap it, or other times it can go in and fill the 50%. But essentially, the higher you put your entry in the fair value gap, the least like, the less likely price is to actually reach that. However, I didn't want to, enter from the opening of the fair value gap because the risk reward wasn't what I wanted to be. And by the time, I thought about really entering this trade, price had already essentially like closed the gap. So this was at this point I entered pretty much at a 1 to 3, right? And you're seeing here, right? This is what happened with price. Price came up, shot up. Um, and yeah, I normally trade with limit orders because I want to be prepared and just like have that in place. So then once price comes in, I'm automatically tapped in. I didn't have a limit order set, so I entered market execution, but it was around the close of the fair value gap, which it still fits our confirmation, right? Because we took an entry at the fair value gap, right? Price came up, tapped the fair value gap, so that's our entry queue. We just happened to trade um, around the close of the fair value gap. So this trade ended up being about a 1 to 3 for me. And once price tripped me in, right, the lowest level that I'm seeing is this level down here. This was the the price leg that price created. So essentially at this point, I'm waiting for price to go down and close under this purple line, right? Close under this level, because once price closes on this level, that's when I'm allowed to move my stop loss to break even, following my own strategy and my blueprint, right? So at this point, two candles in, right, we see that price clearly closed under this purple line. So at this point, I would move my stop loss to break even for a risk-free trade. And you see here, right, a few minutes after, price comes down and obliterates the sell side liquidity target. So this trade ended up being literally a 7-minute trade, right, where I tripled my risk. Um, so this was a super quick trade, right? You're seeing that price comes in, taps the gap or completely closes the gap, and then you're seeing that it essentially reverses and completely melts and smashes our target. So really quick 1 to 3 risk reward trade. If you taken it from halfway through the fair value gap, it would have been a 1 to 2, or at the start of the fair value gap, which 99% of my trades is always at the beginning of the fair value gap is where I take the entry. But this was a special case where I just, had to market execute this position, and it ended up giving me a much better uh, risk to reward, which, I'm happy about. So there's one trade that was a 1 to 3 risk to reward. If you consider the loss that we took on Monday, I believe it was, what day was it? Monday the 17th. We took a loss on that day, and just yesterday on Thursday, I technically didn't enter that trade, but if you follow your confirmations and you took that entry, it would have resulted in a loss. So that for me, I only took one loss, but um, if you just follow everything right, it would have technically been 2 losses for the week. But this win right here could have just erased those losses. In my case, I walked away with profit because Monday was one loss, right? I lost one R, one risk reward, you can call it. And then on this trading day, I basically made 3 risk rewards. So I walked away net profit with 2 risk reward, right? Whether I'm risking 1%, 2%. If we do by percent, say Monday you lost 1%, and on Friday you gain 3%. So you walk away, roughly net profit of 2% gain. And that's what it takes to be a profitable trader, right? Profitable trader doesn't mean win every trade and never lose, right? Profitable trader means walking away with profit, walking away with wins, with money in the account, right? Having the account grow. So even if you take a loss one day, or you take losses, like a back-to-back loss, there's no reason to get discouraged, because we know that when we take trades, and when the trades win, the wins significantly outweigh the losses, right? One win could make up for one, two, three, right? Like multiple losses. So there's no reason to concern yourself with that. Like we do expect, we know the strategy works, we know this model delivers. So all it takes is just patience, right? Knowing that there'll be another setup in the future, and that when the setup does happen, right, you should have the confidence to stick the trade. So for example, this is a fair value gap that I'd like to see, right? This I would consider to be a strong fair value gap, because we're seeing displacement, we're seeing aggressive move down, and we're seeing like an obvious gap that you just can't miss as a trader, right? So these are the trade that I like, are the trade setups that I like to see, right, with gaps like this, and targets that are easy to reach for. Now we do see, if we press play, we do see that price also continues going down and down and down. So yeah, it went and like cleared these lows and started clearing these lows and this low, and I don't know if it actually grabbed that low down here. Um, but for us, we like to go for the low hanging fruit, which are the easy targets. So the easy target would be this low right here after price activates this first low. The reason why I move my stop loss to break even after claiming the first low is because that is technically sell side liquidity. That is technically a target, and there's no guarantee that price is going to go to our final target of sell side liquidity, right? If price comes down and clears this low, it technically did take liquidity on the other side. So That's why I like moving my stop loss to break even after price closes, not wicks, right? I like to see price close under before moving it. So it all depends on the trader, what you have in your blueprint, how you want to decide when to move your um, stop loss to break even, right? In a case like this, if let's just say you entered, right, you're seeing a swing low at this level right here, like this black candle, right? You're seeing it also makes a swing. Maybe after this candle went under it, you could move your stop loss, do this high to reduce your risk, right? The point of trading, you just want to minimize as much risk as possible, because that's what's gonna set you up to succeed. So whatever your strategy is, or whatever you have in place to move your stop loss, because I do recommend that once price makes it to, like, I guess, a safe place to move your stop loss, so you're not getting prematurely stopped out. For me, I noticed that when price closes under, that's usually a good sign for me, to move my stop loss to break even. But that's pretty much the trade setup. This was a winning trade on Friday. So this trade could have, either just erased your losses, or, taken out your losses and also put you in profit. So that's why there's no reason for us to really concern ourselves with losing if we take losses early in the week. The good part about the strategy, we don't take many trades, but the trades that we do take are quality setups, and more often than not, we do walk away with profit and we do win the majority of our trades. So this is definitely a high winning setup, um, successfully performing model. But you see the logic there, right? If price goes up bullish and takes out buy side liquidity, right, and we anticipate price to push in the other direction, if the market is flooding them, if the market is now aggressively entering in sell orders, right, we do want to see um, displacement. We do want to see this aggressive movement down, because that lets us know, oh, that that the market is actually in the game, trying to actually move price in the direction we want it to go, right? We want to see aggressive movement to the downside, because then that gives us confidence that price actually does want to go in that direction. So if you found this video helpful, do leave a like, subscribe, do leave a comment if you have any questions with anything. Um, Hope you found the video to be helpful, and I just want to keep dropping gems. I want to keep dropping these daily videos to really help you guys grow as traders, so you can see my strategy, and if you find it helpful, you know, for you to adopt it, because you're seeing it day in, day out, the same phenomenon repeating. You're seeing that I'm taking entries at the same location, I'm exiting at the same location, right? And we're pretty much crushing it here in the market. So this strategy has a super high win rate. Doesn't take many losses. When it does take losses, we can brush it off, because the risk to rewards are really great. And with the strategy, there's some weeks where you may not take a trade. There's other weeks where you may only take one or like two trades in the week. But the setups that you do take are going to be quality setups, and more often than not, you'll be able to walk away with something. So just trying to share my knowledge with anyone who wants to stumble across these videos. So hopefully it's going to be that one student that really sees the power in this and decides to adopt this for themselves, because this, it honestly doesn't get better than this. So once again, it's Joel. Hope you found the video helpful, and I'm gonna be coming back at y'all with more content soon. So, Joel, I'm out. Peace.